business entities are very familiar with the terms contribution to various funds like Provident Fund and ESI. It is based upon the contribution by employers as well as employees as per the defined percentage in accordance with the respective law. The Provident Fund is an investment fund that is jointly established by the employer and employee to serve as a long-term savings to support an employee upon retirement. But it is also an additional task for every entity or business to compute the PF as per the rules and submit the compliances on time. Hello everyone, I am Neha from Webtel, and today in this video I'm going to tell you the important rules of an organization or entity who are providing the PF facility to its employees and are liable to complete the compliance related to PF contribution. Before starting this video, I would like to request you to subscribe our YouTube channel Webtel Electrosoft to get regular compliance updates. Now, from the beginning, we have to take a review on what is PF for both employers and employees. For this, I am taking you to my screen for better understanding. First of all, we are going to know what is PF, Provident Fund. Provident Fund is a government-managed retirement savings scheme managed by the employer for employees, wherein employees and employers both contribute a part of their salary to this fund. Amount in the funds get accumulated for every month for the employees, and an employee can withdraw a lump sum amount with interest after retirement. Now the next thing is who is eligible for PF deduction. The liability to deduct PF lies with employer. Any organization employing 20 or more employees is mandatorily required to be registered under the EPF Act. Next comes the PF rate. As such as employees is concerned, employee is to contribute 12% of the basic salary towards EPF, and when that is employer's part, employer has to contribute 8.33% to EPS and 3.67% to EPF. Next thing is when the EPF is deducted, the same is to be deposited into EPF account. The date to deposit that particular PF to the fund is 15th of the following month. For example, EPF contribution for the month of May should be clear all the payments before 15th of June. Next is interest. If there is any late payment of depositing the PF into the fund, an interest of 12% per annum is to be applied on employer for every single day delay in depositing PF. In case the challan is delayed to be paid, in that case the interest penalties are as shown on the screen. 5% interest per annum for the delay of up to 2 months, 10% interest per annum for a delay of 2 to 4 months, 15% interest per annum for a delay of 4 to 6 months, and 25% per annum for a delay of more than 6 months. Now here I have listed some EPF related regular tasks for the employers. First of all, an employer is to be registered under the EPF Act when he gets eligible. After that, every employee whose PF is to be deducted is to be registered on the portal, and any modification, if any, for personal details is to be done. Then a UAN number is to be generated for each employee. UAN number stands for Universal Account Number, unique number 12 digit for each employee. After that, KYC details are to be updated on the portal for each employee. After doing all these things, PF return is to be submitted on the portal. After submitting the PF return, the PF details for each employee is recorded on the portal. Then the employer's duty is to provide the UAN number to employees so that they can access the EPFO portal and check how much amount of their PF has been accumulated in the account. The same can be done after EPF registration for employees. Now, let me show you the different methods of deducting PF followed by different organizations or entities. First method of PF calculation with limit both. Under this method, PF is calculated on maximum of fixed 15,000 rupees, even in case the employee is earning more. The EPF amount contribution is limited to 12% of the 15,000 for employee and employer both. Second method is PF with limit. It says that PF contribution by employer is restricted at 12% of 15,000, but employee can contribute more if he desires so. It depends upon the criteria for which pay heads are to be considered as salary for the calculation of salary, and PF is calculated on those heads only, even if the amount exceeds Rs 15,000. Third method of PF without limit is, it does not suggest the limit of employee to contribute for PF at any grounds. Employee can contribute to PF as he wishes. Fourth method is fixed wage rate, under which a fixed wage rate is decided to calculate PF and it is done on the basis of the same. Here I have taken an example of different cases of PF deduction with the same salary amount as mentioned in the table. As you can see, basic pay is 12,500, DA 2,500, HRA 4,500 and any other allowance 2,500. But the PF calculation for all the cases are different. First case is with limit both. PF is arrived at 12% of 15,000, that is 1,800. Second case is with limit. PF is calculated on selected heads which are assumed to be basic, DA and any other allowance, and the PF is arrived at 2,100. Third case is without limit. Again, PF here is calculated on the selected heads which are assumed to be basic, DA and any other allowance, as this decision lies with the organization, and the PF is arrived at 2,100. Last case, PF is deducted at 12% of the fixed rates as fixed by the organization for the employee. In this case 20,000, and the PF is arrived at 2,400. Now, as we have gone through the different cases of PF deductions, let me now show you how HR pearls calculate the PF with ease. As you can see the screen now, for better understanding, I have already created the organization and the employee master. I have already enabled the PF. As you can see here, PF is applicable for this organization, and I have already chosen the heads for salary calculation as shown in the customization tab. I have already marked the pay heads to be considered as salary for the calculation of PS. You can see the heads marked as basic, DA and any other allowance here. Now let me take you to the employee master tab, wherein I have already created 4 different employees for different calculations with the same salary but different PF methods marked in the financial tab. Say employee fixed wages has been settled with PF fixed wage, and the fixed wages are settled to be 20,000. The salary details are the same 22,000 as shown in the example. Next employee with limit, the PF details are marked as PF with limit with the same salary, and so on. Now, in order to reach the PF calculation, firstly the attendance is to be processed by going to the transaction tab and do the attendance by daily or monthly basis, whichever is applicable for that organization. As you can see, the attendance is already saved for these employees. After processing the attendance part, we have to calculate the TDS part, for which the PF calculation will appear. In this case, as you can see, I have already created the TDS part for better understanding or easy access. You just have to select the employees and click on calculate button to calculate the TDS. The software will automatically calculate the TDS for all the employees marked. We can scroll the window to check the TDS detail and the deductions, if any, applicable for the said employees, if there are any changes to be made, and then we will click on verify and save. As we click on verify and save, TDS is posted successfully and the software will automatically navigate us to the salary page. Similarly, we have to select the employees and click on calculate button to calculate the salary for the said employees. As you can see, the gross earnings, gross deductions and net payment are also available here, are showing here. If you need to access any one of the employee, you just need to double click the employee. The salary details will appear at the bottom window or if we are required to access all the details of all the employees at once, we can click on detailed view, and this window will show us the eligible wages and salary details for each employee along with the deductions. As you can see, the deductions are here visible. PF deductions are 1800, 2100, 2100 and 2400 as these were in the example we already discussed. After the salary, the requirement is to post the salary. The employer will post the salary after checking all the details entered. Once the salary is posted, now the employer is required to deposit the amount of PF to the PF fund and file the return for the same. In this case, if you need to deposit the challan, you have to go to the compliance reports and click on ECR. Previously, when the process was done manually, deposit challan and monthly statement were done separately and were deposited manually to the centers. But now, when the process is online, only one ECR is to be generated, that is challan and return both form. In this case, you can see only 4 employees are visible, employees for whom PF is deducted. You have to require to select the employees and click on load ECR data. The details for the said employees will appear on the screen with the eligible PF wages and EPS wages. The employer is required to reconfirm the details shown up here and click on ECR file. When we click on ECR file, the software asks us to store the data or return to a location. As you can see, I have created a folder named PF and the file type saving is ECR file that is to be deposited on PF portal. The file is generated successfully. The only thing remaining to do is to deposit the particular file to the department's portal. For that, you need to access Unified EPFO portal. Employer is required to log in through the credentials created while registration at the portal and then go to the payment. If there are any payment pending, the employer is required to do so, and after that he can submit the ECR file. After that, the PF compliances will be completed by the organization. So this is how HR Pearls help an employer to complete the PF process in the software. I hope by now you must be clear about the process of PF compliances in the organizations. If you want to know more about the HR Pearl solutions, which I just used to follow the PF rules and prepare the calculation easily, then visit the link mentioned in the description below and let us know in the comment section if you have any doubts. Give a thumbs up and subscribe to our YouTube channel if you found this video helpful. Next Tuesday, we will be coming up with another interesting video to make the compliances better for you. Till then, stay safe and stay tuned with us for a better compliance journey.